Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
So we're going to talk about the things that we have found that are going to prove that the market's not going to crash. At least not anytime soon. And what I mean anytime soon is not this year. This is 2022. It's not going to crash this year. Okay, Juana, in a normal, healthy market in the U.S., there's normally homes in forbearance, right? Which means that they're behind on their mortgage.
Right.
How many is that normally?
1 to 2 million, not a whole lot.
Okay, 1 to 2 million. So we're going to show this chart. I'm going to put this chart up on the screen so everyone can see it. Now, this is the loans in forbearance for the last 2 years. Mm-hmm. Now, as you can see in 2020, there were a lot. There were over 4 million.
Right.
Because
that makes a lot of sense because remember, 2020 is the year when everybody stayed home. Even Las Vegas shut down, which has never happened. So everybody stayed home. Those that didn't lose their jobs or were laid off or whatever, maybe they were home working in their pajamas or however that they were still able to make a living. But remember, most people were out of a job, at least temporarily for some period of time in 2020.
Okay. 2021, people went back to work, mm-hmm. and home prices started going up.
Right.
And the number of homes in forbearance dropped below 3 million to 2 to 3 million. Slightly high, but not terrible.
Right. So this is when people went back to work. They started catching up on their bills. And of course, remember, the reason all these homes were in forbearance and not in foreclosure is because the government stepped in and said, hey, if somebody mentions the word COVID to a lender, they're automatically part of this protected group where you have to work it out with them and you can't foreclose. So that actually is a whole different ballgame than what happened back in 2008. So if you remember back in 2008, we didn't have that. In 2008, if you didn't make your mortgage payment, you were toast, you were out of there. The best you could hope for was a short sale or it was going to be foreclosure time.
Okay. By the end of 2021, though, we got back to a normal rate of forbearance between 1 and 2 million.
Right.
But something happened interesting the end of the year, beginning of this year. Mm-hmm. Drop below 1 million.
Right. And that makes a lot of sense because remember, that's when we hit this employment point where anybody who wanted a job had a job. There was labor shortage. There was upward pressure on wages. So all of that makes a difference as far as people being able to afford their mortgage, get caught up, get everything straightened out financially. Okay.
So compare this with 2008 mm-hmm. or even 2006 where you had over 10 million loans in forbearance. It would have been a huge difference compared to now. It's like less than 10%.
Right.
Like 7%, of the homes. And the reason is everyone has equity.
Well, actually, there are 3 reasons.
Okay, 3 reasons.
Okay, so reason number 1, like you said, everybody's got equity. But why do they have equity? The reason they have equity is because the lending practices changed. So this goes back into number 2. Number 2 is because the loans are so much different this time around. This time around, we're not doing 125% loans. We're not doing stated income loans like we were before. Before, the joke used to be that you could fog up a mirror and get a loan, and it really wasn't that necessary. Maybe you didn't even have to fog up a mirror. Now the lending practices have gotten much more strict. And then number 3, of course, like I said before, the government stepped in and said, you know what, we're not going to have a rerun of 2008. That was a bad experience. We don't want to do that again. And the banks learned. That was not good for them. They want to be good neighbors. They want to be good stewards. And so they worked with everybody who was interested in having a workout, make it work for them. They put payments on the back end. They did whatever refinancing they had to do. They did loan modifications, whatever it took to keep that homeowner in the home so that it protected everybody's equity. So this is what I want to make sure everybody understands. The banks didn't do this to be nice. The government didn't do this to be nice. Everybody did it because it protected everybody's equity, including the bank's equity. Because remember, those homes, they were not bought with people's money. They were bought with the bank's money. So in protecting everybody's equity, the banks are protecting their own equity. And that's what kept prices consistent. And as people got back to work, as people shuffled their lives around and refocused their lives around their home life, that's when home values started going up, because People didn't have anything to spend money on. Remember, they couldn't go on vacations, right?
Right.
They couldn't go on vacations. They couldn't do anything. So then they started pumping money into their homes. So maybe they either improved their homes or they looked to purchase a bigger home. They also did some consolidating where maybe multi-generational living took off a little more too. So there are a lot of reasons for this happening. But by no means is 2020 to 2022 anything like 2006 to 2008.
But this
There's no similarity.
This is what people are doing. So there are those YouTube videos that have millions of views where all they say is the market's going to crash and this is why. Well, and all they talk about is prices going up. Price go up, must crash. So
I don't even know that those people believe that. I think it's just clickbait.
It's yeah.
And so really I think those videos are very disingenuous.
Yeah.
They are not based on facts. They are not based on data. They are simply based on just wanting to make the most noise out there and stand in town square and yell big profanities basically at the market.
Funny story. I challenged an agent on Facebook who said that the market was going to crash. And I said, then sell your house that you own. And he basically came up with some excuse why he wasn't going to sell his house. So the market's going to crash. You sure it's going to crash? Okay. I'm put this chart back up. Look at the number of homes in forbearance. It's 780,000. That's just late on the payment. We did a video last month where we talked about the actual number of homes in foreclosure in Vegas. It's 0 essentially. It's like 1 a day. One house a day being foreclosed. It's nothing. It's like none. And the leading indicator, notice defaults, is record lows, like the least we've ever had. And it's not because the banks as much are just saying, well, we're not going to, if you're late, you're late. If you're late on your mortgage, you're late. This is what this is measuring. This is measuring people late. If you're not late, you're not getting foreclosed. Another reason is everyone has equity, like Juana was saying. So if you do get behind, you sell the house.
Right.
You just go, hey, I'm behind on the mortgage. I just want to put it in the MLS and sell it. You get top dollar, you get some cash. Or an investor comes in and says, I'll take care of it. I'll just buy it. Here's $50,000. I'm going to make you current, and then you sign the house over to me. I'm going to sell it and put a little money in my pocket. And they go, fine, I'm happy with that. They could have made $100,000, but they just took the quick 50 grand and left. Right. That happens all the time. Okay. So the first thing that would cause, it's going to take one or two things. Really only one thing's going to cause it to crash. Massive inventory. To where the point where people have to start lowering their price. Right? Because we need to, in order for the market to crash, you have to create a disequilibrium. It's a big MBA word, economics word. Disequilibrium. And the only way you're going to, right now we have a disequilibrium. We have not enough supply, too much demand, pushing price up, right? The other disequilibrium would be too much supply, not enough demand. Okay, now I'm going to show you the numbers for Vegas. And the numbers for, that we just did a video 2 weeks ago, okay? Now I'm going to put up the numbers for Vegas. This is the inventory in Vegas right now. It's even lower than it was 2 weeks ago. And it's like 1,300 houses on the market, single family residences. It's effectively like in a normal market, it used to be a house would turn over every 7 years. So 2003 to 2008, during that time frame, the average person sold every 7 years. Okay, so in a housing market with 400,000 houses, we always had like 60,000 sales a year, roughly. Okay, 60,000 a year. There's 1,300 houses in the MLS. There's no way there has not been an excess number of homes in the MLS or listed for sale since probably 2009. Was the last time that there was too many houses. Prices were still kind of going down, but 2011 we went back to normal market. Prices started climbing. Right. Okay, but this is the thing everyone's going to say. So we've explained it's not foreclosures. There are none. They're not going to happen. Right. There's none. 0. Forget that. That's what everyone says. Oh, they're going to foreclose. Everyone's got equity that buys their house 20% down. Okay. It's not too many houses on the market. There's no inventory. And we're showing you numbers for Vegas, but this is all over the US. pretty much every place is like this. Okay.
Which is really very interesting, I think. Remember, we've talked about this a lot. Real estate is very local, hyper-local. And the fact that this is happening across the country, I think is really interesting and should give everyone some pause as to the strength of this market.
So let's talk about price. Prices can't keep going up at 30% a year.
No.
They can't, that can't happen because eventually no one would be able to buy.
Right.
Because it just eventually be like, well, I can't pay $2 million for a 3-bedroom house in Las Vegas. That's, it's beyond what I can do. But rents, the problem is too that rents are going up. So what's really weird is it used to be in some markets it's cheaper to rent than buy. But in Vegas, it's still almost cheaper to buy than rent in some cases.
In most cases it is, yes.
It's cheaper to buy than rent. So the average person who says, I think I'll just rent, and then they go, wow, look how much rent is, $2,400. Oh, but I could buy the house, put some money down and pay $2,000 a month and have equity build because
I think you hit the nail on the head as far as being able to put some money down. So the thing that always says, that the people always say, well, but people don't have money to put down. But remember, for 2 years, they had nowhere to spend money. So people actually are sitting on a lot of money. The data says that this is the largest savings rate Americans have ever had.
Yeah, like 13%.
Americans have never had this kind of savings. I mean, look, people, we're not Germans, okay? Germans are known to be savers. Americans are not. We spend it faster than we make it. And in this case, we didn't. So because people have all this money, that's part of what's fueling, these home prices, and that's part of what's enabling people to purchase homes and pay above appraised value for these homes. So, which is again pushing those prices up. Now, how long that's going to continue, I don't have a crystal ball and I don't know, but there really doesn't seem to be a short horizon on that right now.
Right. And just to point this out, appraised value is not the government approved stamp of value.
No, it is it's an appraiser's opinion of value, and the appraiser works for the bank because people generally buy homes with the bank's money because they get a loan. This is the amount that the bank says, we think this is what the home is worth. So we think that if we turn around and we had to sell this house because the borrower doesn't make the payment, this is what we think we could get on the open market for the home.
Okay. The other thing that I've heard when we state all these things is, interest rates. Interest rates are now almost 4%. And they were 3% last year. That's going to crash the market.
No, absolutely not. Interest rates are still at historic lows.
Yeah.
Look, anytime the interest rates are below double digits, you're not doing too bad, okay? There are those of us that remember interest rates being in the teens, okay, for a home mortgage. So interest rates are still phenomenal. I know that most people watching this video probably don't remember the interest rates for homes being in the teens, but a lot of us still do. And honestly, while it was some time ago, it wasn't, 100 years ago.
The 80s?
Okay?
It was the 80s?
It was in the 80s. So that was definitely traumatic for a lot of home buyers. But 4% is not traumatic, and particularly not when you're considering that wages are going up, there's inflation, so there are other economic factors going up with it. So to some extent, home prices and interest rates are not as exorbitant as they might seem at first glance because we have other values going up, such as incomes are rising.
Okay. Finally, people quoted the war. The war is in Ukraine is going to somehow crash real estate values in the U.S. Well, it's not going to do anything to real estate. As a matter of fact, there was a bunch of articles that have all come out in the last week from like national real estate think tanks and organizations that cover real estate. Mm-hmm. And the articles all say the same thing, that the Ukraine-Russia war is not going to either affect it at all or negligibly affect it. Meaning there's not enough stuff that would affect, like it'll affect home prices probably in Ukraine, but not in the US. Like it's a war over there. It's not really affecting us. Like gas prices are being affected because of oil supply, which Russia, we get a lot of oil from Russia, but not real estate. Like real estate values you would see it already, but it's actually the war's going on and the same activity that's been happening is continuing to happen. Like, it's not changing at all.
No. I mean, I think it's going to change other behaviors that people engage in, but I don't think it's going to affect people as far as purchasing homes. I think people will continue to purchase homes. It's a good place to park some money.
Yep.
Look, we all need to live somewhere, and especially when times are uncertain, we tend to hunker down and invest in things that we know, and we all know about a roof over our head, right?
Yeah.
So people will invest in homes.
As long as we have inflation, real estate is going to be a safe haven, and people are going to invest in real estate. And I do not believe that they're going to treat it like a commodity and rush to sell.
No, not at all.
And I think that it actually would be good to get more people to put their homes on the market.
It would be great.
It would be healthy for the market.
Yes.
Would be nice if prices didn't go up by, 20, 30% a year. It would be nice if they just went up by 5-7%.
Right.
Kept up with inflation and maybe a little extra. But as long as rents are high, as long as inventory is low, as long as foreclosures are non-existent, because they're non-existent, like none, as long as there's high employment, rising wages, those 5 things, real estate is not going to crash. No. Real estate is following what the market is doing. It's not like Bitcoin, where it can change because a bunch of people get hyped up into buying, and then they go, oh, I better sell some, and then they see it going down and everyone goes in. And real estate doesn't do that. It did it the last one for a different reason. It didn't do it because prices were too high. It did it because of the wrong types of lending, where a cocktail waitress could go out and buy 5 houses at 100% and never put any money in them, and then by the time go buy new construction. So the new home builders were building like crazy, going, we have this demand, and then those people would flip them by the time they were done for $50,000 more than they bought them for, would put $250,000 in their pocket and go right back to another home subdivision and did that again. And they did it a couple times, and then the 3rd or 4th time they tried to do it, because they were, the prices would go up over the 6 months while the house was being built, it ended.
Right.
And it was ridiculous behavior. That's not we don't have ridiculous home building right now. We don't have excess supply. Oh, here's the other thing I didn't say. We still have 4 million houses short in the U.S. We're 4 million housing units short in the U.S.
And what's interesting about that is that not only are we short housing units, but we have combined households. So we're probably short maybe more than that.
Right.
So and what I mean by that is that when you have multi-generations living in one home, at some point, people are going to want their own space without their extended family. So if you have 2 or 3 generations living in one home, are they counted against those 4 million short in homes in the U.S.? I'm not sure that full situation is really taken into account.
Right.
I think people selling today are selling because they're relocating, they're moving up, they're moving down, but for the most part, people aren't selling. The other people that I think are really watching this market closely and really thinking about selling are people who maybe don't have a long time horizon, people who have more days behind them than in front of them, and so they're thinking that maybe they might take advantage of this great seller's market now because maybe they're not going to be around in 25 years when the market rolls around again to this sort of market. So we have had some inquiries along those lines. So if you are in that phase of your life, please go ahead and reach out to us, because we'd love to talk to you about selling your home and doing something else with the money. Yeah.
I do think that you're not wrong to sell the house. To capture your equity.
Right.
If you're moving and you don't want to be a landlord, sell the house.
Absolutely. And being a landlord is not for everyone. I don't discourage people from being landlords, but I don't encourage them either. It takes a certain amount of intestinal fortitude, as I like to say, to be a landlord.
Yep. If you just feel the market is overbought.
Yes.
And you're just nervous and want to get out now, then do it. Get out now. But I don't believe if I was going to move in 6 months, I don't know that I would sell my house now just to lock in a price and then rent back for 6 months. I might wait a couple months, but I mean, I think the market's still going to keep going up. And what makes me say that is when a rental goes in the MLS at a competitive price, it gets immediately, almost instantly gone. And
Right.
even if it's not competitive, it still gets rented.
Right.
And as long as stuff rents, investors aren't going to sell because what are investors doing with their money? The other problem too is investors have a hard time selling because they have to pay the taxes. Mm-hmm. And then the other problem too is if they sell and they move their money somewhere else, then they're running into the same problem where they got a higher market.
Right, and if you look at it, certainly the stock market has been a lot more volatile in the negative way of late versus real estate. Mm-hmm. So I think people are kind of staying put and letting their money be parked and be safe in real estate.
Yeah, I think real estate's the new gold.
Yes.
It's gold. It's funny because whenever I talk to the preppers
mm-hmm.
and they are gold, gotta have gold, and it's the only way you'll be able to buy anything. Like what do you do? Carry a bar of gold down to the store and shave some off and buy an apple, And everyone's not going to have gold to transact, so gold's not going to, whatever. But anyway, what I'm saying is, real estate, it's an asset. Mm-hmm. You can collect rent from it.
Yes. And
maybe they can pay you in gold.
Or Bitcoin.
You can or Bitcoin, but you can't. Anyway. So,
we know this was a good video, and we know it was a long video. So thank you for hanging in there with us. We really appreciate it. If you enjoyed the video, please go ahead and like the video, share it, hit the notification bell, and leave us comments. What do you think? Do you think that the real estate market is going the way of the Titanic, or do you think that we're going to the stars? Which way are you leaning regarding the real estate market?
It's going up. All right. Like the video, share it, tell all your friends, post it on Facebook. What else?
See you on the next video.
See you on the next video.
Bye.
Bye.